Hi guys, Max here, and this is your daily market update for yesterday, the 22nd of July. And as you can see from this heat map behind me, it wasn't brilliant, and we saw a drop in the markets after a really strong week, one of the strongest that we've had in 2022 so far. The S&P 500 fell by 0.9%, the Nasdaq fell by 1.8%, and the Dow Jones fell by 0.5%. So you can see that tech companies, on average, did a little bit worse than the rest of the market, with Google and Meta performing the worst. Basically, any company that has large revenues derived from advertising, well, they struggled yesterday because we got earnings out from Snapchat and Twitter that were really poor, and they derived their revenues from advertising. So there's a fear going around the markets that actually advertising revenue is not going to hold up too well during the next recession. We also got some data regarding business activity in the US. It's called the S&P Global Flash Composite Purchasing Managers Output Index. It's a bit of a mouthful, but it basically just measures business activity across the country, and it fell for the first time in 2 years last month, which is obviously not good news. So that's just a little bit more evidence that actually the recession is finally starting. Across the rest of the world, and things weren't brilliant either, but the Americas and Europe were okay, not brilliant, but just about okay. Asia and China in particular, though, did really quite poor, with Chinese markets thrown into turmoil once more for a bunch of different reasons that we will cover on a later video today. The FTSE 100 then rose by a very small 0.1%, and the Stoxx 600 rose by 0.3%, with the MSCI World Index falling by 0.5% for the day. In the world of currencies, there wasn't a major change. The euro is still sitting at $1.02 a piece. The pound is still sitting at $1.20 a piece, but the yen did actually rise for the day and is back up to 136 yen per dollar. In the world of fixed income assets and the bond markets, we actually had them behave as you might expect they would behave in a normal recession, with floods into the bond markets to try and escape from risky equity markets. And so yields fell. The US 10-year Treasury yield fell by 12 basis points. It's down to 2.76% now, which is quite a low figure compared to where it's been for the most of 2022. The German 10-year yield fell by 19 basis points, and the British 10-year yield fell by 11. Basically, investors just seeking a flight to safety, some kind of safe asset, and bonds tend to be that asset. Finally then, for traditional markets, what happened with commodities? Well, oil prices fell once more by about 2% for the day, which is nice to see. Again, basically on this idea that a global recession will dampen demand for fuel, for oil, and so that's been reflected in the price today. WTI crude is at $95 a barrel, and Brent crude at $99 as we speak. And then gold prices rose very slightly by about 0.5%, up to $1,740 an ounce. In the world of crypto then, asset prices did fall for the most part. The only real green that you're seeing on this heat map here comes from stablecoins like USDT, USDC and DAI, but in reality they just stayed pegged to $1. Bitcoin was down 3% to $22,500. Ethereum down almost 5%, still above $1,500 though, and the rest of the market doing that same sort of thing, falling by something like 5% for the day. Really, this is just crypto acting as a risk-on correlated asset, moving in the same direction as tech stocks, as we've seen so frequently over recent years. Now, of course, one of the big pieces of news was that Twitter put out their earnings report for the last quarter, and in short, it was really quite bad actually. They missed their revenue expectations, they missed their earnings expectations, and they missed their user growth expectations, and yet the share price of Twitter rose by 1% anyway. Why is that? Well, because the share price of Twitter is almost entirely determined right now by the likelihood of Elon Musk buying the company for $44 billion. So actually earnings reports like this, whether they're good or bad, it doesn't really impact the likelihood of Elon buying the company, and so its value isn't determined by these traditional fundamental figures that we would expect. The company, though, did really badly, as I said. They lost 8 cents per share, which was opposed to the expected 14 cents of profit per share that they were supposed to get. Their revenue was $1.18 billion, which was against the expected $1.32 billion, which is a massive 11% miss for the quarter. That's the worst miss they've ever had, and that represents negative 1% of revenue growth over the entire last year. This is the absolute damning figure in my opinion. They also saw fewer users than they were expecting, 237.8 million daily users, compared to 238.8 million users expected. And then they've also seen their costs just to run their business rise by 31% year over year to about $1.5 billion a quarter now. Really, this is all the evidence you need that Twitter is an awfully run company. Probably the worst run major tech company in the world, the last one that I would want to own if it weren't for Elon's potential purchase of the company right now. Now, Twitter are, of course, trying to parcel out blame for this poor performance. And, of course, they're trying to blame Elon. They're saying that his takeover bid has brought a bunch of bad press around the company and that that's impacting their earnings from advertising revenues. Now, I'm not quite sure I agree with the logic there. Maybe some advertisers feel a little bit uneasy about using Twitter ads, but blaming Elon for failing to grow a company's revenue and actually having it shrink over a year for a high growth tech company is a little bit shameless in my opinion. They did also briefly mention that actually the ad market as a whole is slowing down, which is 100% a fair point. If you look at what's happening with other companies who run their own ad systems like Snapchat or Pinterest, they're seeing the exact same effect, and the recession is starting to impact companies and their ad spends. The best analogy I've seen used to explain ad spends and ad revenues and how they're going to be affected over the coming years as a recession really kicks off is that Microsoft, Google, and Facebook are basically the lions of the advertising industry. Snapchat and Twitter and Pinterest are more like jackals. Now, when times are good, when everyone is happy and everyone's got loads of money, everyone eats, and so these smaller companies are able to generate huge amounts of revenue and make a healthy profit. The problem is, though, that when the savannah gets a little bit bad, when people start to starve, when a recession starts, Snapchat and Twitter and Pinterest will be the first to lose out on this advertising revenue because their adverts on average offer far weaker returns on their investments. And so they're going to be the first ones to get hit when companies start reducing their ad spend, which is exactly what we've seen happen over 2022 so far. Now, of course, with the Elon drama, whether or not he's going to buy the company, we still haven't got any major updates there. We are on track for an expedited court case in a few months, but other than that, there really is no new news regarding that. Now, we did get some news coming out from FTX, who are putting together an offer to basically bail out and buy out Voyager. Now, Voyager is one of those typical cryptocurrency exchanges, DeFi company. They offer lending protocols, staking, all of that sort of stuff. And in short, they were very irresponsible with the assets that they had under their custody. They gave out massive loans to Three Arrows Capital, who are now bankrupt and their owners are now imprisoned and awaiting trial. And so they've lost all their cash. They filed for bankruptcy and they're basically a dead company. And so anyone who left their assets with Voyager, they've lost almost everything. Now, Sam Bankman-Fried, the founder and the guy who runs FTX, well, he is proposing to buy Voyager's customers essentially rather than the company itself. And then he would pay back parts of what Voyager owes these customers. He would gain some loyal customers, so he would win out. People would be more likely to custody their assets with him in the future because he's been very responsible this bull market, and some of these victims would get some of their capital back. So this would be a good move if we can actually see it come to fruition. Now, unfortunately, not all of Voyager's assets will be... not all of the assets that were custodied with Voyager would be recovered and repaid using the system, but it is definitely a better outcome than what is looking like is going to happen right now. Sam Bankman-Fried is actually making loads of moves just like this. He's been very responsible over the last year. He's kept his company in very good standing and he's got loads of cash. So FTX are basically making the rounds and acquiring a bunch of other companies, putting themselves in the position to absolutely dominate the world of crypto come the next bull run. Now, I'm basically making a pretty out there prediction that in about 10 years, Sam Bankman-Fried will probably be the richest man in the world. And I stand by that prediction, and this deal is a testament to the reason why. Now, of course, this deal isn't going through yet. We're not going to find out immediately if it is going to go through yet. It needs to be accepted. It needs to go through all the legal conditions and everything like that. And it also wouldn't be a mandatory deal for Voyager's customers. It would be up to each individual person who's been wronged by Voyager, whether or not they want to go for this individual deal. Now, in a bit more company news, we have something coming out of Uniper, which is, of course, a massive natural gas company that operates in Germany. Now, in short, it's going bankrupt because of two reasons, but basically the war in Ukraine is destroying their business model. The gas that they have is coming at a very high cost, and they're also not getting as much of it as they would like. Now, the company really can't do anything here to fix its situation. It is entirely outside of its control. This is the war in Ukraine. They can't control foreign policy. They can't control whether or not Russia invades another country. And they can't control whether or not Germany is going to institute sanctions, and the rest of the world is going to institute sanctions against Russia either. So in order to stop the company from collapsing and from millions of households and companies in Germany being unable to heat their homes or run electricity, well, the German state is going to bail out the company with a 17 billion euro package, which is an absolutely massive bailout. Now, the details are basically a $270 million immediate cash infusion, which would give the German state a 30% stake in this company. They're also going to be giving them a credit line worth $9 billion and securities worth $7.7 billion. So all in all, it comes out to 17 billion. There would then be a change in law that will allow Uniper to charge higher costs to their customers. And so 90% of the increased costs in natural gas prices are going to be passed on to German citizens, while just 10% will be covered by Uniper themselves. Now, the awful thing about this is that this bailout is worth $17 billion for a company that is currently valued at $3 billion, which is a little bit ludicrous. But again, there really isn't much way around this. This company is essential to supplying homes and businesses with natural gas and with electricity. The German government just doesn't have a choice. They have to keep this company running. Now, speaking of Russia and Ukraine and that war and everything going on there, they did just agree a new deal on grain exports, which is basically a de facto ceasefire on cargo ships so that no one blows them up in the Black Sea, so that grain can be exported to the rest of the world, because there's a massive fear right now that we're going to see a famine and starvation in some of the poorer countries, in particular in North Africa. Now, this is good news, but it is without a doubt not perfect. Russia is without a doubt a bad faith actor. They've lied about this before. They've invaded Ukraine out of nowhere after promising the world that they would never even consider doing that. And the real big problem with this is that there isn't any binding mechanism for Russia to be held to account. They can just change their mind and do whatever they want. Now, if all goes well, this should help to reduce the chance of famine in North Africa and shortages everywhere else. Turkey has been a mediator for this deal, and they've actually been rather quite successful, even if the Turkish economy is in absolute shambles right now. The big news for us is that this should mean lower foodstuffs commodity prices. Prices on commodities like grains and corns will hopefully go down with this, and that should be good news. Now, actually, over the 3 hours of time it took me to put this video together and then to actually start recording it, and just before uploading it, we just got news that Russia has now bombed the port of Odessa. They sent a missile over to the port of Odessa and tried to blow up some container ships. So this deal has literally been agreed for less than a day, and Russia has already proven once again that they're a bad faith actor and that they're not going to abide by this agreement. So you can pretty much scrap all of the positive stuff I just said. I've been proven wrong before I even uploaded this video. Finally then, I thought I'd talk just very briefly about the state of the Tory party leadership contest here in the UK. It is now down to Liz Truss and Rishi Sunak, and it seems very likely that Liz Truss is going to come out and win here. Now, she is quite a right-wing character, even for the Tory party. She's got a very strong stance on Russia, so we shouldn't really be expecting any kind of change in British and Russian relations, or any kind of change in the British attitude to sanctions against Russia. What we can expect, though, is for Brexit tensions between the EU and Britain to get a little bit worse, and we're likely to see some more spats come about. Now, why is this? Well, because she's vowed to review all EU law that's currently British law as well, and so some of it's obviously going to get binned, and this is going to be very annoying to Europeans because they like the fact that their regulations are still in control and still mandated by law in the UK. She said that she's going to have a red tape bonfire, which frankly will be good for British business alone, but it will be bad for cooperation between the continent and the UK, and so we should expect tensions to rise from this. Expect Macron to complain, expect some French fishermen to start blockading Jersey or Guernsey again, some awful things like that, and this will probably affect markets at least to some degree in Europe over the next year. If you enjoyed this video, then make sure to like, comment and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to iTrust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join iTrust Capital. Thank you all for watching. Stay stoic. Until next time.